Hello traders, how are you? Vladimir here from Traders Academy Club, and in this video I would like to talk about pivot levels, what they are, how they are used, what do they represent, and I will share with you my preferred way to use them, and I want to explain, of course, why. So before I go to the charts and explain you from real trades examples, if you are new to this channel, welcome to our fantastic community. Please subscribe to the channel with the subscribe button below the video, and just remember to enable the notification. And also I invite you to join our trading family, Traders Academy Club, and enjoy from the best of our trading education, real-time trading education, and our real-time trading ideas and trading opportunities. Follow us with the links below in the description or in the pinned comment in the comment section. So let's begin then, and to present my technique and the way I prefer to use the pivot points and why, I would like to show that on one of my trading systems, the strategy we use, the Forex Triple B PRO, which is based on the Bollinger Bands with the pivot levels as the ideal trading levels to join the trend. So first of all, what are the pivot levels and how are they actually calculated? So pivot levels are mathematical levels calculated by the traders, and unlike any other technical indicators like the RSI, MACD, CCI, stochastic, you name it, they are based purely on high, low, close. Okay, and based on the different mathematical formulas they have, they calculate the previous day and the previous week levels. There is a pivot level, and there are three or more. Of course, there are formulas for more levels which are used as resistances, and three under the pivot level which are used as support. The assumption of traders is that due to the simple calculation based on realistic given numbers, highs, lows of a real market, and highs, lows represent the real buyer and the real seller power force. If you think about it, the maximum price is the maximum price the buyers could achieve. The minimum price of the day or the session or the week is the minimum that the sellers could achieve, and based on that there are levels. Okay, and the assumption is that by reaching these levels we can treat that as resistance or a support and anticipate bounce from this zone and to join a trend or reverse the trend in specific conditions. So this is the main usage of the pivots. There are many different ways to calculate pivots, the classical one, Camarilla ones, etc., etc. Of course, the mathematics behind it is also slightly different, but the logic is completely the same. And that's what I want to show here in my preferred style. So first of all, let's talk about some very important logic which I apply everywhere. This technique and this logic, for me, it's the basic guideline of reading the price action, the price behavior, and try to understand what is going on in the market. Uptrend is defined when we have sequence of highs and lows in the same direction. Uptrend, which means upside, highs and lows pointing upside. Downtrend, it's the vice versa, lower highs, lower lows. Okay, this is the basics of the basics. The highs are used as resistance areas, right? The lows are used as supportive areas. Once support is broken, it becomes to be a resistance area. Okay, don't forget, there is also a resistance area from the previous high in the uptrend. And now we have a low. Basically, this is how we create a zone, right? This becomes a resistance. This was the previous resistance. Boom, you have yourself a classical resistance zone. So this is, again, the basic of the basics of the level. Same, of course, apply to the downside, right? This is support. This is resistance. Once it's broken, right, this becomes a support, and this is the previous support of the downtrend. Boom, this is yours. You got yourself an action area. Now, that's, again, as I said, the very basics. Besides that, there is the what we call trending structure. That's where the highs and the lows are moving in the same direction, and there is a corrective structure. Corrective structure could be one leg to one of the lows, okay, and then continuation of the trend. Correction could be classical ABCD, two-wave structure, okay, and then we expect further continuation. Or correction could be more like in a range for some time before it managed to break, and then we continue with the trend. Same applied, of course, to the downside. Now, this is the basic logic of the price action. And right now on the right top corner video, if you don't know what about the price action, there is a video you can find now, a price action tutorial, where I explain a little bit more about what is the price action and how do I work with that. But if you want to take it a step further, actually many steps further, I invite you to join us in our trading family, Traders Academy Club. Get your access to completely free VIP course about price action. And besides the real-time education, real-time trading ideas, you would enjoy from a massive course on a price action and our supportive trading community, of course. So this is, once again, the basics of the price action. Now we take that and we put on that pivot levels. Okay, so I'll go blank screen once again, and I want to explain here a few things. But actually, before I do that, I would like to ask your help. If you find this video and the other videos I upload on this channel helpful, useful, and you benefit by watching them, please show your support back. YouTube algorithm needs this little like, so hit the like button below the video. Drop some feedback in the comment section. 20 seconds of your time is a huge help to me and my work, and of course this channel, to stay relevant and keep growing in YouTube. So thank you very much to everyone who helped. Also feel free to share this video with anyone who you believe can benefit by watching it. It's completely free and open for the community. So going back to the Triple B, where you would see the pivots in play, let's take a look again on the basics. Okay, so there are calculations. Okay, and then I'll draw in different color. So we have several supportive zones, okay, and some resistance zones based on the pivots. Okay, so this is a pivot, and this would become resistances, and this would become supports, S1, S2, S3. Classical way of calculation. The assumption is if the price comes to these areas here or the support, it would bounce, and if it goes to the resistances, it would resist and turn around. When you take that with the combination of the waves I showed you before, the price action, you finally are able to get amazing trading opportunities. And many times you would see prices bouncing from zone to zone, from zone to zone, and provide amazing windows, ranges to trade from, to trade towards to. Now, the way I love to use the pivots is the following. So, as I said before, I will be presenting that based on the examples of Forex Triple B, simply because this is a Bollinger Band strategy that is built on the pivot levels. If you are interested in learning more about the Forex Triple B, and also there is an option to get it completely free with the brokers program, just follow this link, forextripleb.com, or you can find the link down below the video in the description or in the pinned comment in the comment section. And you can find all the information about this project. And again, if you find it useful and something that could help you in your trading, you can get it directly from here, also available free with the brokers program. For any questions, please don't hesitate to contact us and to ask us. Also, you can ask in the comment section and we'll be more than happy to answer. So let's take a look on the example which I want to explain here. Here, as you can see, we got pivots. Okay, so this is the current day pivot. This is the previous day pivot. And this is a pivot from a previous day. Okay, as you can see, it's how do I know? Because it simply ends here, right? And it's, as you can see, daily and weekly. So this is how I know. This is the built-in indicator we have for Triple B purpose. Now the Bollinger Bands, when we have trend conditions meet, Bollinger Bands come in play. And when we have the price bouncing off the Bollinger Bands, I'm checking for all the things I mentioned before, trending structure. So what do we have here? We do have a flip, a fake high, and then lower lows. Besides that, we have lower highs, lower lows, trending conditions. Then we get a pullback. And this pullback comes to the place where we have, look at that, daily and weekly pivots, and they hold. You see that? This is how I love to use my pivots. When it's not just one level, but it's a daily zone with the weekly zone, any of the pivots or the support and resistances with the combination of a day before. The day before was, as you can see, support 1. The pivot, it's slightly higher. So all that is a massive area. And I know that if we come back to this area, I'll be looking for possible further continuation. The good part of the Triple B, and that's why I love to use this technique with Triple B, is because Triple B alerts me when these conditions meet. And then I have just to check the trending structures, the price action, and see if I am on the zone. That's it. If I am good to take the trades. Okay, so this is how I love to find my opportunities here. Now let's take a look on more. For example, on the euro pound. Okay, this trade also, right? A second, just click something wrong. What do we have here? We have clear trending structures. Okay, clear trending structures. We got a correction. Now we reject here and look what level we are at. We are in daily pivot zone. Let me just mark it for you. Daily pivot zone and daily resistance, and also from the previous day, right here, previous second day. Okay, this is a massive opportunity for me, and I check around. I make my analysis. So we have the support that turned to be a resistance, right? It turned to be a resistance and now rejects. We are in trending structures, clear trend, and basically the pivots are there, holding, easy trade. Next one. This is also a good example. It failed, but it's fantastic trade, and which proves we cannot expect 100% success rate. It does not exist. All you should do in trading is to focus on improving your accuracy and your success rate with the risk reward working positively in your favor. This is the way in this business. There will be never 100% success rate. Stop looking for that, and I hope you actually don't look for that. Now, so what do we have here? Clear trend, correction, right? The support, which was the resistance before, hold. Okay, pretty straightforward. The Bollinger Bands still hint us for the buy, and look at that pivot, classical pivot, and a pivot for the day before. For me, that's a zone of action. So yes, in that case, this one failed, but the trade by itself was simply fantastic. Take a look on the gold. Again, same story. Absolutely clear trend. Resistance turns to be support. Bollinger Band bounce. Okay? And pivots. Not just one, but two. Pivot with the supportive day, with a resistance level for the pivots from the day before. Again, easy decision, a classical trade. And again, look what we get from zone to zone. And you will see that many times when you combine the pivots, especially when there are more than one. Same, again, I can continue and continue and continue. You can find more examples on the website, okay, forextripleb.com. But again, the technique is the same, the same exactly, okay? Higher highs, higher lows. This was a resistance. Now it becomes to be a support. We are in the pivot zone. As you can see, pivot on the daily, weekly, and the day before. Can we ask for more? The answer is no, we can't. It's a fantastic trading opportunity. And again, this is pretty much straightforward the way I think and I find best to use the pivots. Okay, trending structures, support that become resistances, and combined on the pivots. Not just one level, two levels, or ideally even three with a day or even two before. The stronger the zone, the better your chances. Don't look for 100% success rate. It does not exist. You would never be able to find it. Okay, that's the truth. So stick to, for me, for example, I stick to in between 70 to 80% success rate. That's what I want. With anything of these numbers, with one-to-one risk reward on average, of course, I also look to improve the risk reward, but even with one-to-one risk reward as average, you would start to make a lot of returns. If you increase the risk reward, you would do more. So if you use the pivots, combine that with trending structures, support and resistances, ideally resistances that become support or the vice versa. And remember, not one straight level, combination of create a zone. When you create a zone, you dramatically increase your chances and your odds. And trading is a business of odds, business of probabilities. That's it. So that's my way of the pivots. So I wanted to explain you what is a pivot and how it is used in trading conditions, combined with the very basics of the price action. Okay, and I want to show you how I use that in the Forex Triple B. If you're interested to learn more about this project, fantastic project, then this is the website, forextripleb.com. You can find the link directly in your browser or below in the description or in the pinned comment. Don't hesitate to ask any questions if you have any. I hope it was useful for you, and I hope you would find these tips helpful in your trading as well. I wish you all the best. Stay safe, be healthy, and I wish you fantastic trading. Bye for now. I'll see you soon with more videos.